I don't know if you just watched it a couple hours ago or not, but Larry and I did, and we have some strong opinions about a Federal Reserve chairman and the committee itself, who seems to have, in my opinion, moved the goalposts. Larry Goldberg, what do you think? Did they move the goalposts? It seemed like it to me.
You know, these are goalposts that are really, fictional goalposts that they're able to move at will. And they really, they really talked about last time they talked about, they're not going to get to 2%. They're going to, approach 2% with caution because, they want to overshoot too far. And, there's a lot of that. None of that this time at all. It was 2%. We're not at 2% yet. I mean, come on, guys, make up your mind.
I have repeated their statement over and over and over again, where they specifically said we need 6 months of PCE data to know that we're there. They got their 6 months. A couple of the reporters asked them specifically, you've got 6 months. What do you need now? What will 8 months be enough? Will 10 months be? They didn't. They moved the goalposts, Larry.
Yeah. And the problem is, that they're really, I think, dicing with danger. I think that it is an extremely dangerous moment. I mean, they keep on saying that the labor market is strong. That's their fallback position. Yeah, but the labor market remains strong. It is until it's not. And I don't think it is. And so, they say their mandate is labor, full employment,
right?
And no inflation, below 2% or under inflation. That's what they say their mandate is. And, who am I to tell them their mandate? That's what they say it is. Well, by their measure, they're in full employment. They're if anything, they're actually beyond full employment by their measure, not by my measure, but by their measure. On the other hand, inflation, if you look at true inflation, which they stopped truflation, they've stopped looking at it. They did talk about it about 6 months ago, but now they don't talk about it anymore. Because why? It's under 2%. And then they talked about, approaching 2%, not being at 2%, because once you're at 2%, you're on your way down and it's too low. Well, they're not talking that way anymore. Now they've dropped truflation references. They're focusing on, so it feels like we're in forever. And, if you're in my shoes and you're looking at it from my perspective, I think they're forcing us into a recession. They're taking these recessionary components of the economy and they're driving the rest of us into that recession.
Yeah, one of their other promises, if you will, because Larry, one of the things I think that the Fed should be doing, maybe I'm wrong, and I'm sure that there's no mandate specifically about this, but I believe that they should be giving the market signals that they can count on. So in addition to the signal with regard to 6 months of PCE, they also gave a signal that said that they were very interested in what the consumer's impression about inflation was. They didn't want the consumer to be feeling like there was, inflation coming, because then you get into this rotation of the consumer believes it's going to happen, therefore, et cetera. Well, all of the recent polling has shown that the consumer feels that inflation's under control. So there was another goalpost that he just kind of pushed to the side. It's no,
didn't even mention it. Yeah, he didn't mention it. Strangely enough.
Then we have the real rates issue. He very specifically stated the real rates are outside of what most people would consider to be neutral at this point. Well, if the real rates are outside of what most people, including him, apparently think is neutral, isn't that just one more reason to begin the process as opposed to not to?
But the other thing is that, you know, he's sort of stepped back from this notion of, you know, a March pullback. I mean, it's like March has been taken off the table.
Right.
That's the most damaging part of this, and that's why the market's really hurting right now. So, you know, I sort of did I've got this, you know, the differences between this time and last time. I mean, I don't know. I don't know if we want to show that or not, but
Oh, you're okay. I have it's available if you want to.
yeah, I have it. Let me put it into a slide quickly, but it's just on a cut and paste right now.
So yeah, there was a couple of things that they completely left out, Larry. I think if I got the information correctly from X, they completely pulled out a section that was kind of surprising. Let me see if I can find it here. Oh, whoops! Oh, nuts! I thought I had it here right on top. I don't have it. Anyway, they did bring up my favorite subject, productivity.
Yeah.
They did say that this would be probably the reason why we've been able to get this result. I was pretty happy to have them say that. We've probably been able to keep a strong economy at the same time that we've had inflation reduction because of greater productivity. And so that was a good statement. Now, tomorrow we get the productivity numbers for the fourth quarter. That could be very useful in terms of an additional plot point going forward.
Yeah, for March. Yeah, it's possible. Anyway, this is the you know, this shows you the change between last time and this time. He's dropped this conversation about the US banking system being sound and resilient. Well, let's start from the beginning.
Well, no, listen, can we pick up on that one, Larry? That's the
Sure, go ahead,
that's the
please.
exact one that I was going to look for. We had a bank report today where the bank was one of the ones that even merged in order to take care of another failed bank, and they got hammered on their profits, and their stock went down dramatically today. We might be looking at another round of bank problems.
Yeah, so I wasn't paying attention to that because of this whole Elon.
Oh yeah, we'll talk about that in a few minutes, Larry.
yeah. So yeah, it's interesting that they dropped the US banking system is sound and resilient, tighter financial and credit conditions. It's fantastic. You know, they're skirting around all the areas of the economy that are really hurting.
Yeah.
So, and then they say that the risk to achieving its employment and inflation goals are moving into a better balance. The economic outlook is uncertain, and the committee remains highly attentive to inflation risks.
Larry, I want to ask a question about when is the economic conditions going forward certain? It's kind of like, to me, that was like the biggest nothing burger. Why did they even put it in there? You always have uncertainty going forward. Did he mean to say that they're more uncertain than usual? I don't think so. It's
right. Yeah, so that's a good point. I mean, but you know, economists do tend to opine on the economic outlook. And the committee remains highly attentive to inflation risks. Well, there's still, you know, in other words, inflation is still leading the conversation.
Sure. Larry, you know, the market was going up. I don't know if you were watching it the whole time.
Yeah, it was.
It was going up strongly during the first 15 minutes of his talk, maybe even the first 20, 25 minutes of his talk, because he was so positive. It was like the economy's doing well. Employment's doing well. Inflation's coming under control. We've got 6 months of good numbers out of the PCE. It looks like everything's going to be fine. All we need is a little more information so that we can make a final decision here. And then he drops the bomb. Like you said, it's basically that marches off the table.
Yeah.
And then the market tanks. Although, interestingly, the bonds, they finally recovered. And so the bond yields are now down for the day on the 10-year, up down over 11 basis points. And
really?
Yes.
That surprises me.
That surprises me. They had reversed to where they were down to about 7 basis points. And then after he was done, boom, they went back up to 11 basis points down. So the bond market seemed to be taking this in stride much more than the stock market was.
Yeah. Yeah. Well, he did say that inflation is moving sustainably towards 2% rather than return inflation to 2% over time.
Yep.
So, I don't know. I really have fears for March. And I really, felt that this was an important, I mean, I would have actually made the move back, last year, but
right.
Anyway.
I'm not sure what he thinks the great harm. I know he thinks the great harm is potentially having the inflation tick upwards, but I'm not sure where he thinks he's going to impact that. I'm not sure where he thinks a little bit of drop would really cause inflation to get back on track.
It's in the employment numbers.
Yeah.
It's in the employment numbers. Look, he's got this twin mandate: employment, full employment, and 2% inflation. Well, he's above in his 2% inflation, but he's really good on his employment.
Yeah.
Tackling this problem.
Right.
And here's a guy who's been, scared, significantly scared by the sudden appearance of inflation, the massive spike in inflation that he saw happen, and then he said first it was, temporary. It was just, what was the word he used? It was going to
transitory. Yes.
Yeah. And then it didn't, it stayed, and really he got a fright, real fright. And I think they all got a fright. And, that kind of fright doesn't go away very easily.
And yet he said over and over today, he basically talked about what you and I have talked about a million times before. This was a boom bust situation. It was a broken economy. It just needed to settle back down again. And we're back to almost normal on all fronts. We're back to almost normal. And what is commonly happens when you've got a black swan event or something like this, what happens usually you find a point at which the economy takes up where it left off. Right. The stock market takes up where it left off. That seems to be what we're doing right now. And yet he seems to be just so reluctant to break. And okay, I'm going to give you one more theory, Larry, and then maybe we could spend a couple of minutes talking about the Delaware case. The theory that I came up with last night, and this is a theory about what the Fed might be really thinking, is we've got the economy doing okay. 5% interest rates, 6% mortgages, not that bad. The economy is dealing with it. They're able to handle it. It's not crippling anything at this point. So therefore, let's let it play out a little longer,
right,
before we make our move. Now that's going to hurt the federal budget because of the higher interest rates the government's paying. And it's going to potentially hurt these small banks. But other than that, I don't know. Maybe it's a wiser move.
Yeah, I think it's a very dangerous move.
Yeah.
I mean, these balance, I believe that we would be wise to call this, to start leavening off. I think that the problem he sees this inflation, that if it starts creeping up again, it's going to run away.
Right.
What he hasn't seen since 2008, that when the economy starts slowing down, it can run away. I mean, it can fall down.
Yes.
I'm more worried about that than I am about the runaway inflation.
Yeah. Yeah. And I think
because I think the runaway inflation was a direct result of, the closing of the economy.
Right. And the
direct
pumping.
result.
And the pumping.
And then, followed by this gigantic pumping. So yeah, I'm very worried, and I see signs, and anyway, I think it's overdone, and I think he's overdone because he's one scared boy from a beating he got in the playground. Anyway,
All
let's
right.
move on.
All right. Maybe stop sharing and we'll talk about for a minute what happened in Delaware yesterday that had the entire community up in arms. We had a judge who started her career. I don't know if you knew this, Larry, but she started her career doing poverty law.
She did philosophy first.
Did philosophy first, then she did poverty law. And then somewhere along the line, she decided she wanted to get rich. So she had to give that up, and she went off and started private practice. And eventually she got this position. So I saw a lot of evidence of someone who is biased against great wealth. And I think it was Warren Redlick that said the evidence that he saw was that she decided on what her conclusion was going to be and then found a way to get there.
Well, it wasn't that difficult for her to find the way to get there. So because Tesla hadn't been as careful as they should have been in terms of the breadcrumbs. I mean, I was a Tesla shareholder at that stage. I signed on to that agreement 100%.
Yes.
I knew his relationship with Kimball. I had, somehow figured out that there was some relationship between them. I'm a very bright guy, being able to figure that one out. I also knew of his relationship, such as it was with Ira, and the biggest error she made, and she made quite a few errors, but the biggest error she made, and by the way, the judgment wasn't that terrible, but the biggest error she made, the most serious error she made, was calling the chairman of the company not an independent person.
Right.
Now, this is a woman who'd been the chairperson. I shouldn't call her chairman. This is a woman who'd been a director of, Telstra, the largest, a gigantic telephone company in Australia. She's been a director of Toyota, and she didn't have any relationship with Elon before she joined this company, and she's kept an extremely, I think, well-managed office of the chairman or seat of the chairman or chairperson. I just don't understand how she arrived. Well, I read how she arrived, but it made no sense to me. So I think she erred there. Whether that's a ground for appeal or not, I don't know. One thing I do know, while she could construct the fiction of a lack of disclosure by the board, it's a legally constructed fiction, because everyone knew that this is what Elon wanted. And the board made the decision to give him what he wanted, and they told us that.
Yes, yes.
I signed on to it. All the shareholders of Tesla signed on to it, and we were very well aware of the relationships of one to the other. So from a formal point of view, they didn't, dot every I and cross every T, or add a lot of T's and I's to dot and cross. I get that. But what she's done is made a decision that will damage directly and unequivocally and irreversibly the very people that she, in this legal fiction she's created, sets out to defend.
Right. Yes. Yes, indeed. Or
And you know,
potentially.
this is an indictment.
I
Not
agree.
potentially. She's damaged us. And here's the reason. Because she's going to award damage, she's going to award fees to the plaintiff attorney
Right.
in the sum of around $5 billion. It's
Where did that number come from?
10%.
10%. Oh.
Yeah, $5.5 billion. That's kind of the standard. That number that's a real number, and it's not that arguable. I mean, it could be 7, it could be as low as 3, but it's in that range. And that's going to come out of our pockets.
Right. To a plaintiff lawyer who is basically the reason for the lawsuit.
That's, you know, we can all get aggravated about that. I'm talking about the facts of the matter.
Yep.
She's damaging the very people that she's created this fiction
Right.
around defending.
Yes.
The very people who, to a person, and I believe I could prove this, to a person were very well aware of what they were agreeing to. Very well aware of what they were agreeing to, and very well aware of Elon's relationship with every member of the board.
And to the New York Times statement, I think every person that voted for that was also well aware that the odds of him achieving all 12 tranches was almost beyond the expectations.
It was zero. It was zero. I mean, people gave it zero. We were in the middle of, you know, I mean, production hell, you know, the 420. It looked like the company was on life support.
Right. It was like, whatever, Elon, if you're willing to do this, we're willing to let you take a shot at it. And quite frankly, as someone who's paid commission salesman almost my entire career, I'm always willing to give the guy that takes the big risk the big reward. And that's how I made a lot of my decisions in hiring salespeople.
Now some of the opinion focused on the first 3 tranches.
Yep.
That she claimed, or that the plaintiff attorney claimed was almost a lock. It wasn't almost a lock. It looked like it could be possible, is what it looked like to me. It looked like it suddenly, you know, out of this production hell, suddenly things started to begin to gel. Well, you know, the chance, I mean, the whole thing was just mugged up. And it was a mugging.
It was. And the way I saw the mugging was that typically, if you are unbiased, the plaintiff isn't going to win on every single piece. But the plaintiff won on every bit of it, starting.
I'm not sure that's true. I'm not sure that's true.
What did she ever say that the defense won on?
Well, she chose 2 very narrow components of the that the plaintiff won on, and the 2 narrow pieces was the disclosure of the board's relationship. That was the central component, and the other was the first 3 tranches. But that was it. I don't.
She came out against for the plaintiff on the fact that the board did not do due diligence in putting the package together, that they didn't spend enough time on it, that they didn't have enough meetings about it, that they were just listening to Elon and they weren't really paying attention. They didn't go and try to even argue or debate back and forth whether it was a good deal or a bad deal or anything else, or try to negotiate to a lower number. They came out.
That was the central point about, you know, they were all on the same team.
Yeah, I know, but it starts there. So this is the first. She comes to that conclusion first, is that it was not fairly arrived at to begin with. So then if you have a question of the fairness to begin with, then you have to go to, okay, how can you remedy that fairness? Well, the remedy for the fairness was put it to the vote of the minority of the shareholders.
Fully disclose it to how you arrived at it, and then put it to the vote.
Right. And then the fairness would have, if it had been fully disclosed, then the fact that the shareholders voted for it would have almost made it a priori true, okay, or okay. But no, I can't find a single place in that entire document. Now, I only scanned it. I didn't read it line for line, but I scanned it pretty carefully. I couldn't find a single place where they said Tesla or Elon or the board did the right thing. They went with the plaintiff right down the line.
I'm not sure I'm entirely aligned with you on that. All I know is that the key finding, the reason that they lost is because the board didn't fully disclose to the public, to the shareholders, that they were in Elon's pocket. I mean, I think, and honestly, every single article I read disclosed that. Every single, I knew it. I knew that the board were going along with Elon to go along with Elon, that this was what he wanted. I knew he had designed it. I knew he wanted it. And I knew this is what would satisfy him. Now, the interesting thing is, there are even some places in the judgment where he actually tones down what he wants. He said, no, that's too much.
Yeah.
And anyway, look, bottom line is, we as shareholders have been damaged by this finding. We, the shareholders, are going to continue giving Elon what he wants.
Yes.
The institutional holding of Tesla has gone up since this original agreement. And so I don't know if that will impact how we're able to do this, whether we're able to do that. So that's going to be an interesting issue. Plus, Elon's shareholding has gone down quite dramatically, so he has far fewer shares to vote, and I'm not sure he would vote in this case. So,
no, I think again the minority. I think the minority has to vote. So you have.
I have a call that I'm missing.
Oh, I'm very, very sorry. Okay.
I have to jump. So thank you very much. We'll talk soon.
We'll see you on Saturday morning, Larry.
Yeah.
Bye. All right, let me just go on to say that we have the issue of what happens going forward. Going forward, there seems to be a very clear case for the potential for the existing board to put this back to a vote before the minority shareholders again, just like last time, this time with full disclosure of exactly what's going on. They'll just have to dot those T's and cross those I's. Okay, dot the I's and cross the T's that Larry was just talking about. I'm suggesting, I don't know if this is what'll happen, but I think that they could put this to the shareholders at the same time as they put the new compensation plan. That would be the second part that I would recommend. I also believe that this will be appealed no matter what. It will be appealed on for a number of reasons, if not the least of which is to get rid of that $3 to $7 billion paycheck to those attorneys who were just out for a payday. They could care less about the company. They could care less about the shareholders. They were caring about themselves getting paid. And that's why I don't practice law after spending 3 years at UCLA Law School, is because of that aspect of how our laws and how attorneys operate today. Okay, that's all I got for you. I'm looking forward to talking to you once more today. We will have Jeff Lutz on in just a little while here, about 5 o'clock California time, in about 3 hours from when you're seeing this. Roughly, Jeff will be on to talk about all the good news that happened today, even if Tesla ended up down after the chairman of the Fed crushed what was a green day for Tesla. It's been great talking to you.